All right, all right, all right. Hey, traders. Hey, traders. Hey, traders. Hope you guys are doing well today. In this session, let me just make sure we're all good to go. Yes, we are. In today's session, guys, I'm going to be showing you something really interesting when it comes to the markets, when it comes to the actually the Dow Jones. And so I'm going to be sharing with you exactly what I see happening. And we're at a bit of a what I call a do or die area in the markets. So let me see if I can just close down these applications. Don't base a trade based on what you see. Really, Yanni? Really? That's the only thing. That's the only thing you can do is trade on what you see. What you think is never a good idea. What you think never happens. So yeah. So yeah, guys. So what I want to share with you today is I want to share with you. We're at a bit of a do or die area right now, and it's really, really, really interesting to see what's happening right now. So I want to share with you something that I'm seeing on the Dow Jones and what's going on through there. So that's what I'm going to be sharing with you right now. So before I get started, guys, let me bring up the typical. I know, Yenny. I know. Yeah, no. I think. Let's, guys, do not place a trade based on what you're seeing in this session today, because trading is risky and it can cause substantial financial loss. There's so many areas you need to know to become a really good trader, and it does take you a long time to become a good trader. Now, trading can be simple, it can be easy. The hard part is you being consistent, disciplined, and patient, and sticking to one system and one setup only. So there's a little bit of introduction, guys. Also, guys, the link in the first link, the link in the description. Apply for the private coaching if you're interested in getting me as your private coach, learning my trading system, and also getting me as your weekly coach to help you with your trades. And so you get weekly coaching sessions and all that sort of stuff for the rest of this year. Then I have one spot left open for the rest of this year, and then I'm closing it down. So one spot left open, and then that's it. So if you're interested in that, then go fill out the application form, and I'll call you and I'll see if we're a good fit. Now, guys, before I do start this session, before I do start to talk to you about what's happening right now, based on why we are at do or die area in the markets. Before I start to talk about that, I want to touch on something really, really, really interesting and really important to your success in the markets. Here's the thing, guys. Every time you get into a trade, you must be getting into a trade, okay? You must be getting into a trade or a trading setup based on how the markets work, and based on a trading setup that you truly 100% believe in. You know the average win-loss ratio, you know the average success rate, which is the win-loss ratio, and it's one setup that you look to trade. You must be willing to trade those setups only and nothing else. So if you are trading based on, well, this looks good because it's in an uptrend, so I'm going to buy it, or this looks good because of that support, I'm going to buy it, or I'm going to short this, I'm going to short that. I guarantee you that's where most traders go wrong in the markets. Okay, because they're like, oh, well, the market's up right now, we're at resistance, and we're definitely going to crash. I'm going to short the SPY, or I'm going to buy this, I'm going to buy that. Every time I have gone into and I've just, sold something because I think I was going to make a lot of money, or shorted something because I think I was going to make a lot of money, or bought something because I think I was going to make a lot of money, or I got into something just because I thought it was a good idea and everything looked really, really good. Every single time I've done that in the past, it has never, ever, ever, ever worked out. Every time I've just stuck to a really good trading setup and stuck to that, that's when I succeed in the markets. And every time in the past when I've done that, I've got my backhand handed to me whenever I don't stick to my trading setup. So we are not smarter than the markets, and we can never predict what's going to happen. So the roadmap to your success in the market is find one simple trading setup that you honestly believe in. And then your job is to be consistent, showing up every day, disciplined, and also patient and taking that setup. That's the 4 steps to your success. 1, find out just one simple chart setup that you truly believe in. Know exactly what you're looking for. What's the setup look like? What's the entry bar look like? Everything like that. Then once you know that, then your job is to be consistent, disciplined, and patient, and then you'll do well in the markets. It really does come back down to those simple 4 steps. So wherever you are right now in your trading career, in your trading path, if you don't have step 1, well, consistent discipline and patience, all sorts of stuff. If you're patient in the markets, but you have no idea what you're looking for, then it's back to front. Step 1, find out exactly what you're looking for in a setup. Step 2, be consistent, disciplined, and patient at only taking that setup, at only trading that setup. And when you do that, that's when you start to see, that's when you start to see your account start to grow, because that's the 4-step formula. So as I said before, guys, I'm not coming here to say that I'm perfect. I'm coming here to say whenever I have traded in the past, and I still do it from time to time, whenever I trade in the past based on what I think, hope, or fear, it's never a good idea. And it never, ever, ever, ever work out. Whenever I just stick to the plan and don't trade a lot and wait for good setups, I have really, really good trading months. And I don't trade a lot. I'm very calm, very collected, and I do really, really well from the markets. Whenever I don't do really well, it's just I'm putting too much money on per trade and all over the place. It's a barrel of monkeys. It really is. So I wanted to start off with that there, guys, because if you don't even have a setup in place, then that's where you need to start. Okay, trading is not, well, making money from the markets is not a matter of luck. It's a matter of preparation. And the preparation is that what exactly are you looking for in a setup? Not 3 or 4 setups. You don't need 3 or 4 setups. What exactly are you looking for in a trading setup? And what is the average win-loss ratio over time? You need to know those sort of things. And then your job is to be consistent, disciplined, and patient amongst those things. Once you do those things, you can start to kick butt big time in the markets. So right now, let's have a look at the markets and let's have a look at what's going on in the markets. And let's actually talk about this here. The markets right now are at a do or die area. The markets are at a do or die area. Now, what I mean by that, if I bring up, you're looking at right now on the Dow Jones, okay? And the Dow Jones pretty much did nothing today. But if I bring up, say, my weekly chart here for a minute, actually, no, let me bring up this chart here and I bring up my weekly chart and I bring on my trend lines, you'll be able to see that right now we are definitely at the underside still right now of this support line. So right now we are definitely at a point right now where it's a do or die type area. Now we did create a significant lower low from here. So therefore, when the market does rally, we're likely to fail. And then I believe we're likely to start to see a leg down from here. Now, when I say start, it doesn't mean no one knows what's going to happen. Okay. But by looking at this here, I don't, you can see here on the daily chart, right? You can see how it's rejecting it and holding it here. So but looking at this here and looking at my green, this box here, this is a major resistance level here. Go back to my weekly chart. You can see what's happening here right now on the Dow Jones. Now, for me, the Dow Jones is the main indice that I keep an eye on. The main one. To me, it's the most important one because it's the top 30 stocks in America. Then you got the S&P 500, then you got the NASDAQ. They're all important, but I find the Dow Jones is that one that says it's giving you a bit of a warning sign, a bit of an early warning sign that if the Dow Jones is a lot weaker than the S&P, then something's not right here and something is just not on par. So by looking at that and by seeing that, that's what you need to be focused on, and that's what you need to be doing when you're trading the markets there. So that's where we're at right now, guys. We're at a bit of a do or die area right now, and I do believe it's going to die. And the reason why I say that is because this point here is where we are right now. I do believe we're likely to get a bit of a sell-off coming off soon, and then this thing's likely to. And once the sell-off happens, like as you know, guys, if the sell-off does start to happen, then this within a week, this could be back down to 22,000 within a week. Now, I'm not saying do not go out there and start to place short trades because I don't know what's going to happen tomorrow. I'm not going to take a short trade just because just because I think the market's gonna go down. No, I take a trade based on a trading setup, not based on just general analysis or looking at the markets here. So for me, so looking at the markets right now, my momentum shift level right now, if you guys have been following me, I've been talking about momentum shift level. My momentum shift level right now is a close below. Is it closed below 24,400 on the Dow? Now, if you guys have been watching my sessions for the last week or so, you know that I've been talking about how the momentum is still on the upside on the markets. It's been slowing a little bit, but we're still on the upside. We haven't actually created a momentum shift on the downside yet. So we're still slowly crawling up. There's nothing on the downside to say that yet. So we're looking at that. That's my momentum shift level there. On the S&P 500, my momentum shift level right now has moved up now based on what we're seeing in this price action at the 2,620 level. That means if we get a nice close below that level, momentum has shifted from the upside now to the downside. And that's what we're looking at there. It's a complete momentum shift there. So so that's that one there. And also on the NASDAQ, the momentum shift. If I actually look at this here, isn't that interesting? Where is this here? Isn't that interesting? Look at that. Isn't that interesting? Look at it. Just held above it. Now it's actually rejecting on this level here. So that doesn't really matter. My momentum shift level right now, guys, is a close below 7,000. So as I was saying before, momentum shift, which means a short-term momentum, which means just looking at the daily candles. Just using the NASDAQ as an example, we had if I use this down level through here, okay, if I use this down level through here, let me just share this with you here, right? So the market here, the market is going down, and then this candle here, the momentum shifted. Okay, I won't go into too much detail about how I measure the momentum, but the momentum shifted on this candle here, and we started the run up from there. Okay, then this big down candle, that's when momentum shifted from up to down. This is when momentum shifted down here. Okay, we went down, 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 up. These two candles here was now showing slowing of momentum, but it definitely didn't give us a confirmation of momentum shifting. So the momentum was still down, 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 and the momentum shifted from that there, and this day here was when the momentum shifted. So as you can see, right, the momentum on this bar here was down. We went through a period of here. We went through a period of possible slowing, like we did here. Then we had a down, down. And as this market started to come back down, momentum started to pick back up very strong. It started going from here, slowing, and then strong. And then this green candle here was saying momentum's now shifted back to the upside. Then we went through this one here went through a possible momentum shift back to the downside. Then to have that completely reversed back to the upside. And that does happen. Like we're talking about the short-term daily momentum shifts. And the momentum has been up ever since on this on this here. And so right now, momentum, if I'm looking at my NASDAQ chart, when I talk about momentum, once momentum starts to get below 7,000, then we're going to have another momentum shift back to the downside. But the momentum on what I look at here by reading this chart here has actually started from here. And even though we've gotten some sideways periods through here, we haven't had a confirmation shift. We haven't actually had a confirmation shift to the downside. So if anyone's saying that the downside is now likely to happen tomorrow and so on and so forth, they're guessing, right? They're guessing. And doing that, it's not really, really helpful to you, and it's not going to really help you out. You don't want to be guessing, and you don't want to be trying to do that sort of thing. You know what I mean? You want to just try to make sure that when you are trading the markets and when you are getting the markets, you wait for the markets to tell you, and then you jump on the train. Okay, then you jump on it. You know, it's so important, guys, that if you think about the markets as a river, if you look at these, I've just drawn up these momentum points, and again, I can talk about how I measure the momentum. It's a really, really, really awesome thing that I learned from a 7-figure mentor. And it's something that I don't really share out in the public because I personally spent tens of thousands of dollars with my private coach. learning this sort of stuff. So I'm very, very reluctant to share this sort of stuff with you. I definitely share it with my private clients and so on and so forth. But I'm trying to share with you guys that understanding these sort of things when it comes to reading the charts is so, so, so critical. But as you can see, right, you can see when momentum starts to shift. And so you can see here, if I'm looking at and if I'm talking about the momentum shifts, this is momentum shifts is talking about like the short-term day-by-day basis on where momentum is shifting. So if I look at this here, we had down, 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 down. Momentum on this candle here, momentum shifted back to the upside, went up, 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 up. And then as the momentum shifted back to the upside, then momentum on this candle right here shifted back down. This candle right here, on the close of this candle here, this is when momentum shifted back to the downside. So momentum shifted back to the downside, went down, 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 down. And it was this candle here that said momentum is now changing. Now, it doesn't mean it's going to follow through. It's just, I'm just sharing with you how I look at momentum here, you know, and so on and so forth. And so, you know, and then the last momentum shift before this one here was this candle right here. So the close of this candle here was saying that momentum is now shifted back to the downside, up, down, up, down. Again, that's the, again, guys, please remember, I'm talking about momentum shifts on a day-by-day basis, or what the market's happening very, very short term, the last sort of few weeks. But you also got to keep in mind a bit more of a bigger picture, which is what? Looking at the highs, lower highs, and so on and so forth to see what's really going on here. When, you know, are the sellers still overall majorly in control? Are we now, just because we have a momentum shift back to the upside doesn't mean the buyers are in control. Maybe short term on the pullback, yeah. So that's basically what you want to be looking at there and what you want to be focusing on there. You know, when it comes to that. So so that's what I want to share with you right now, and the same for the Dow Jones. The Dow Jones, for me, as you can see these arrows here, this is on this day here, the market changed here. This is when momentum shifted back to the upside. Then on this candle right here, it shifted back down. This candle here shifted up. This candle here shifted down, and so on and so forth. And so right now, we actually haven't had, ever since this green candle here, momentum has been to the upside on these day-by-day candles here. We haven't had a short-term momentum shift on the downside. Now, I'm still very, very, very aware of this happening right now, where we are right now. And also, if you're looking at that, you know what, let me just bring this chart up here. And also, if you're looking at this chart here, obviously you can see, you know, X marks the spot, yada, 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 all that sort of down home country goodness. All right, so that's basically what we're looking at right now. We're definitely at this X marks the spot here area. And momentum, once again, hasn't shifted. Momentum for me right now, once we get a close below 24,500, that tells me that momentum from this candle here has been up ever since, okay? This candle here, momentum's been up ever since. We started to slow here a little bit, showing a potential reversal, but then we actually had a bit of a gap up. But yeah, it's actually interesting you talk about that, Joanne. Notice that we actually did get a gap here. Now, this gap here, when you're looking at gaps in the markets, you're looking at, there's three types of gaps in the markets. There's a breakaway gap, which generally happens at the start of a move. When you get a nice gap up, you generally get that in the start of a move. Now, I'll see if I can find something that has a gap. I can't see it here, but yeah, so there's three types of gaps. There's a breakaway gap, which means it's at the start of a move. And so from that start of the move is obviously that's generally after the market's been quiet for a while. So if the market goes quiet for a while, then you get a gap. That's generally a breakaway gap. If the market's been running on for quite some time, then you get a gap. That's either going to be a continuation gap or either an exhaustion gap. Now, we don't know what this gap here is going to be until we actually see what happens shortly after that. Now, if we get a complete reversal down from here, and we get a reversal down like that, we get a nice candle down coming down like that, That's going to tell me that this gap here was indeed a exhaustion gap. And an exhaustion gap is like the end of that sort of that move, so to speak. As you can see here, right? Like, look at this here. What do we have here? We had this, we had a short-term gap here, didn't we, right? Look at this here. We had a short-term gap here. Just a very, not a very big one, but a very short one. The market went down, market went down. Look at this here. Notice this little gap here. What was that? That was an exhaustion gap, wasn't it? Because it was going down, 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 had a bit of a gap down, and very shortly afterwards, we reversed. As this reversed here, that said, oh, that was an exhaustion gap, and now we're likely to spend some time to the upside. And that's exactly what we've done basically from that there. So there's two different things I'm looking at here, or there's three things. One, we're at all this X marks the spot in the markets. Two, we've got this gap here. So if it does reverse, that's going to show that, yes, this was an exhaustion gap and we're now likely to spend some time back to the downside. And three, looking at my momentum shift in the markets. And it's not an indicator. It's looking at these bars here. It's not I don't have some sort of special indicator. It's just looking at the bars. Once we get a close below that 24,400, especially because we're still making lower highs, then we should start to see some deep and also sharp selling in the markets and to come back down to at least these bottoms through here. Again, that could happen within a week. It could happen within a couple of weeks. I don't know. It's not definitely going to happen. I don't know. That's definitely going to happen. So just you don't want to be doing that. You don't want to be getting into a trade based on that there. So that's a bit of an update, guys, for you. I hope you enjoyed today's session. I hope you can see, guys, that really trading comes back down. Just a quick recap of what we talked about today. Trading comes down to four things in the markets, and that's all you need to do to become successful long term. One, find one simple trading setup that you believe in. What does the setup look like? What's the entry bar look like? So there is no questions. Secondly, and then you need to be consistent, disciplined, and patient at trading that. There is no guessing. There is no hope. It's like, okay, I'm waiting for this setup, and that's all I'm doing. And that's it. All right. And then as you can see, right, the better you can read the charts, the better trader you'll be. And as you can see, right, I'm getting all this information I'm telling you right now off the chart itself. There's nothing on my chart here. Everything is coming from the chart itself. It's not a RSI or moving average or anything like that. It's everything. There's so much information that you can get from reading this chart, these bars, these candles, that can start to give you a bit of momentum, where's momentum and all that sort of stuff. Who's in control, weekly support resistance. Those sort of things are the most important things. And when you start to do that, as I said before, the better you can read the chart, the better trader you'll be. I've spent personally tens of thousands of dollars on even my current coach right now, who's a multiple seven-figure trader, and I've learned so much from him, and he's made the massive difference in my own trading. Because of that, that's actually what helps me become more and more successful every single day and every single month in these markets. Now I screw up from time to time, but that's basically what I do. So once again, guys, if you would like to have me as your coach, I do have one spot left open. If you'd like to learn my #1 trading system that gets over 90% success rate, and it really does, with the A quality setups. And if you'd like to have me as your coach every single week to help you with all these other stuff like chart reading techniques and so on and so forth, then go fill out that application at meetme.so/John9. There's a link in the description. Go do that. Also, if you'd like to join my Master Trader Lab and get a free trial to it, then go to mastertraderlab.com. And also that trading course flash sale, that ends in a few hours from now as well too. So, all right. So let me actually answer some questions here, guys, and then I'll finish up from here. I want the market to crash. When will it happen? Young? Well, I hope I've given you some things here. Remember, guys, one thing about the markets here, okay? A stock market crash. I was talking to a friend of mine recently about this. 2008 stock market crash was what? 2008. A crash doesn't happen in 1 month or 1 day or 1 week. It happens over several months, sometimes even a couple of years. A quote unquote crash happens. It takes time. Yes, we do get sharp legs down, but don't think we're just going to drop 50% in 1 week. Now, yes, we could have a bit of a capitulation, 20% move, but remember, guys, don't be trying to get into this market thinking you're going to make a fortune because the market's going to crash 20% in 1 day. That may happen, but that's like yeah, the market the market will give you some bit of a warning signs that the market's going to start to sell off from there. Okay, so just be smart about that. Short the SPY? Not yet anyway. Not yet anyway. The SPY is still very, very, very strongly to the upside. Momentum still strong on the upside. So I definitely wouldn't want to be short in the SPY. The SPY for me, around about, I reckon a close below that 260 level. A close below that 260 level is definitely the area for me to say that the SPY is now shifting back to the downside with momentum. And if that does happen, then we'll probably start to see a bit of another sharp selling period in the markets. Trade what's happening, not what you think or want to happen. Momentum now is bullish, so I'm bullish. When it's bearish, I'm bearish. Don't fight it. Okay, Steve. Okay, cool. It depends on how you're measuring momentum. If you're measuring momentum based on maybe a moving average or something like that, that's okay. Or maybe an indicator, that's okay. But if you can get your information based on the chart itself, that's where the true power comes into it. You can only trade based on what you see, not what you think, hope, or fear. Hey, that's actually catching on now, isn't it? I like that. I think I should trademark that. Never trade based on what you think, hope, or fear. I should trademark that because it's starting to catch on to a lot of people. Yes, exactly. Never trade based on what you think, hope, or fear. If you think something's going to happen, it's guaranteed it's not going to happen. If you hope something's going to happen, get out of the markets right now. And if you're fearful of missing out, or if you fear something's going to happen, it probably won't happen. Die. Talk. Is there danger buying S&P options at the market price, or less contracts at the market price limit only? Honest. Is there danger buying SPY options at the market price? Firstly, if I'm buying options, I never buy market price. I'm always buying probably halfway between the spread. So that's what I'm always doing with that. And so yes, that's basically what I'm looking at there. So, but don't just get into the market. Don't buy options. You only get into a trade based on what the chart says, and then use the market to trade that. Okay. It's not the broker, it's not the charting platform, it's not the instrument. It's not like the Forex market is going to work because the stock market didn't for you. They all operate the same way. They really do. From a 1 minute chart up to a daily chart, they all do the same movements, the same patterns, and so on and so forth. So it's a matter of you becoming a good trader. Bulls are killing it, bruh. Hey, Trent, my number one troll. They have been killing it, bruh, for the last few weeks. You're right. My sneaky suspicion says that's gonna end pretty soon. Isn't the gap caused by overnight move in the futures? Yes, Lewis. Yes, you could. Yes, that actually could be happening. With the gap there, there's actually not much of a gap on the S&P. And NASDAQ as well too. But the thing is, like, momentum's still very strong on the upside right now, guys. Especially those last couple of days. But the Dow Jones is showing a potential reversal here. But I definitely wouldn't want to be short in the market right now. Now, I do think we're going to see an overall market, but on the short term, that momentum shift is not happening right now. So I definitely don't want to be shorting it right now at this very point, because we don't know when that momentum is going to shift. It may not. This thing may continue up. And by looking at the S&P, momentum's still pretty strong on the upside. So I definitely wouldn't want to be trying to fight that. Not yet anyway. And also the NASDAQ as well too. So yeah, momentum's looking pretty strong on the upside. So wouldn't want to be fighting that. John, had you had any issues buying the S&P options at the market price? Versus limit. Oh, okay. I talked about that. Yeah, before. Yeah. I'm always doing limit. What I always do, honest, is that just say the spread on any options. So if I look at the options now, look at me, go to the SPY options here, and I bring up, say, the option chain. So this is the option chain, and just say, for example, I'm looking at my put options. So let's say, for example, I'm looking at, okay, current price right now is call it 270. So at the money right now is 270. You can see the actual price is 280 to 283. So therefore, for me personally, when I'm looking to trade that, I'll actually start at 281, and then I because that's the low end. Then I'll go to 282 and then 283. So that's basically what I'll do there. Thanks. I was asking because it's hard to get in on the minute candle with limit orders and breakout bars. Well, if you are trading options, I don't recommend if you are trading options, that is, I don't recommend using a minute candle. I recommend using maybe a 5 minute. For me personally, when I'm trading the stock market, it's because I am with stocks, I'm trading options. It takes me some time to get into it. So I'm personally probably looking at maybe a 5 or a 15 minute candle or chart. 5 minute on a low end, because that still gives me some plenty of time to bring up the option, because I can see my setup, I can see the entry bar, then I can get in on that option, then I can manage it and pretty easy from there to get out of it. I wouldn't want to be trading options and doing minute candles, because that's just crazy. Now with my futures trading, such as the Dow Jones futures, S&P futures, NASDAQ futures, the other indices, Forex markets, even crypto markets, like I shorted crypto a few months ago, did really well from that. Then that's much easier if you're doing minute candles. I go down to about a 2 minute candle, because 2 minutes, just 1 minute's too fast. 2 minutes is still good for me because I can see things still unfold if you're focused. So using a 2 minute candle, if I'm using a 2 minute candle and I'm using a chart trader, then I'm like, boom, there's no like question like, oh, I've got to bring up this option here and blah, blah, blah. It's like nothing like that. If I can just use a chart trader, boom, to actually buy the future or buy the Forex market or short the Forex market or the futures, then that's basically what I'm looking for. I hope that makes sense there. So yeah, you definitely want to be, that's the way that I trade anyway when I'm trading the markets. Most of my stock market trading, guys, is on the daily charts, but and a lot of and the reason why is because I'm looking to hold things for a few weeks or more, and then most of my futures and Forex trading is intraday based, meaning 2 minute, 5 minute, 15 minute charts, mainly those. I very rarely do I go to a 60 minute chart on the futures and Forex. But sometimes I will. Bitcoin, when I shorted Bitcoin a while ago, as the market started coming off, I did use the daily chart for that. Ray Dalio and Peter Schiff are proper, in my opinion. Yeah, I put Ray Dalio over Peter Schiff any day, personally. Ray Dalio is it. He's the king. He really is. Peter Schiff, nah. There's a very big agenda on the push on, even when silver and gold have been doing nothing, it's like, get in. It's like nothing like that. Ray Dalio has been, amongst all these other people out there, Ray Dalio is the best. So just if you're looking at if you're looking at a person who understands cycles and so on and so forth, and where we are right now in the cycle, then just focus on Ray Dalio. Everyone else, Harry Dent, all that sort of stuff, I think they're going to give you a lot of information that's not going to really be helpful to you. Remember, Ray Dalio, you can't even access his funds, so he has nothing to sell apart from a book. He's a multi-billionaire, so on and so forth. So look at that. Okay, look at that and say, okay, if there's people out there that obviously run YouTube channels and so on and so forth, and I'm not mocking those, but if there's agenda behind that, just be smart, guys. Okay, just be smart. Now, what's my agenda here? My agenda here is to deliver so much value that you'll want to join my coaching program when I do it up. You'll want to join my other education that I can then help you even more with that. But if you don't, it's based on education, and that's what it's all about. It's never based on anything like that. Fantastic. So just be careful of that, guys. Now, obviously, a lot of these other people out here, guys. Like my mate was talking about, Greg Menorino just recently. And a lot of people like Greg Menorino. You've just got to understand, guys, and this is where I come from. This is where I come to you. I don't have anything bad to say about these guys, because they're all delivering a service and all value, and they're all doing their thing to provide a value to the marketplace. But no matter what's happening in the market, you've got to put a positive spin on it, because you know what, guys, life is tough sometimes. And sometimes getting ahead in life, it's like it's going to cut you to your knees sometimes. So we need to have, okay, this is what's happening in the markets, but here's the positive thing. We always need to be putting a positive spin on things. I just find so many people out there, it's like negative, shaking their head. It's like, no, let's put a positive spin on these things. It may be, this may be happening in the market, but cool. What's the positive? What can we focus on? And from that, we can start to move forward in a big way. So I hope you can see, guys, that that's for me personally. I'm all about teaching you the truth. Me being involved with these markets, guys, I have in times in the past, I've lost a lot of money from doing really crazy, stupid things in my last 15 years. And it's only from that that I've gone gray, losing my hair. But also, I come here to share with you the truth about what it really takes to get ahead in these markets. And when I don't follow my own advice, I get my ass kicked, which I still do, I think, pretty much once a year these days. I used to do it once a month, but now I don't do that. Every now and then I think I get cocky sometimes myself. Me personally, I'll trade for like 4 or 5 months, make money every single month. Yeah, I'm the king, blah, blah, blah. It's all right. Now I've got this, and then suddenly, I lose 20% of my 20% of my wealth. I make, whatever, and then I'm just like, damn. So, but lately I've been really good with myself. I haven't been letting my ego get involved. I haven't been letting my fear get involved. I'm just like, okay, well, here's the setup, and this is what I want to trade. So, this is all I'm going to trade. But no matter what happens, guys, no matter how many times I get knocked down, you will not stop me until I get to my goals. And even when I get to my goals, next level, baby, next level. And that's what it is for me. Next level. So I hope you can understand that, guys. Anyway, with that being said, guys, once again, guys, if you are interested I have 1 spot left for my coaching. If you'd like to get me as your coach and have my trading system, and also me coaching you every single week, then go to the link in the description there, meetme.so. If you'd like to get a free trial to my Master Trader Lab, then just go to mastertraderlab.com. All right, guys, that's it for me today. Have an amazing day, and I will see you next time.